Hello everybody. Today we're going to be talking about open high low close and open low high close. We're going to be talking about the importance of this, why you need to pay attention to it, how it is used to gauge order flow, and also how it's used to confirm buy or sell programs. So let's get into it. Right, so as you can see right here guys, we have a bearish and a bullish candlestick. What I want you to see is how this bearish candlestick opens here. Then what do? If we drop down into the lower time frames, you would see that the bearish candlestick opened here, we opened high, and then we rapidly displaced to the downside. Then we came back up and then we closed our candlestick here. So on the lower time frames, it would look something like this. We had it open, we would have came up, made a high, did something like this, displace down, make a low, and then close somewhere here. Let's go on to the bullish example. What would this look like on the low time frames? Well, it would look something like this. We open, we drop down, we displace up, retrace into the breaker, displace all the way up here, create a high, and then we come back down and close our candle down here, leaving a little wick at the top. Now, why does this matter? How can we utilize this in our trading? In the slightest? Well, this is where we get into algorithmic precision. In a bearish example, the wick at the top is used to accumulate orders in the marketplace to then sweep and utilize that liquidity to allow the candle to displace down into its desired objective. For a bullish candle, what we would do is the very bottom wick, this wick right here, is used to accumulate buy-side liquidity resting above here, above the open, to then get later swept after this move up. Then we retrace back into the order block, which we'll get into later, and then displace up into our desired objective. Well then, how do we utilize this in our trading? Well, the first few moments of a higher time frame candlestick gives narrative for the continuation of that candle. Well, what does this mean? Well, if you're bullish and you see a higher time frame candle, for example an hourly, 4-hourly candle, open and we instantly drop down, that is a very good sign, because what we're doing is we're accumulating buy-side liquidity above the open to then later sweep, so then the high time frame candle has room for expansion. And it's the opposite for a bearish example. So now let's get into market maker models inside of these higher time frame candlesticks. So as you can see here, I've drew out a market maker model. I'm sure you've saw this exact schematic many times before, and even I have used this very same schematic on my channel multiple times. If you watch my videos, I'm adding more and more and more things on top of these market maker models, so then you know where to take partials, where to enter, where to exit, and to make your entries and exits more and more and more precise. If you've watched all of my lectures, you would start to understand why market maker models work. I've slowly been hinting at algorithmic signatures and price to show you SMRs, where to take your profits, where to enter. So if you start picking up on those hints, then your trading precision is going to skyrocket. Right, well, let's get into open high low close. As you can see here, I've drawn out a dotted line. All of these dotted lines are opens. Let's say that this is an hourly open and we are on a minute chart. As you can see, our hour opens right here. As soon as this hour opens, we drop down straight away, sweeping liquidity right here. Why is this of any importance? Well, after we see our open and we start to drop down, it doesn't just drop down into any old level that it wants to. It drops down into inefficiencies, meaning highs, lows, or imbalances. What I want to notice is where this high formed and what formed with it. As you can see, the hourly open came with it as well. But what would have been formed up here? An order block would have been formed here. Now, what is an order block? The purpose of an order block is to offer price efficiently. And how it does this is it sends orders into the order book, which then tells price where to go. These are kind of the base concepts of how liquidity works. If you go into an order block, on the lower time frames, there'll be balanced price ranges inside of that order block on the lower time frames. Balanced price ranges and imbalanced price ranges pretty much run the markets. This is because the market runs to imbalanced price ranges, moves away from balanced price ranges. And why does it do this? Because IPDA, the interbank price delivery algorithm, wants to deliver a price as effectively as possible. So why would it drop back down into a balanced price range? There would be no need. So what you would see is a very shallow retracement down into this order block, which formed at this hourly open. This is an ideal entry. Why? Because this order block, after it gets displaced through, turns into a breaker. Because we came down into an inefficiency, displaced away, we would have formed a BISI here. Perfect unicorn model. If your breaker, order block, unicorn model, whatever you want to call it, lines up with an open price, you can be sure that that is a higher probability setup. So now let's move on. As you can see here, we get a displacement leg up, and right here is our next open price. This is our next hourly open. As you can see, we get our hourly open, we drop down into an inefficiency, as I said before. This inefficiency then acts as support and price. We then displace up, and then this hourly open does not get retested straight away. Why does it not do this? Well, because our point of interest would have been right around here. Once this point of interest gets reached, then guess what the market does? It drops down into this hourly open, uses it as intermediate term support, then we rally back up. And where do we rally into? We rally into this intermediate term low that was formed here. Why is this an intermediate term low? Because there would have been a SIBI formed right here. Do you guys see how everything is lining up now? If you watch all of my previous lectures, this would all make sense to you. Then what do? After we come down into this unicorn model right here, we rally down through the BISI on the left side of the curve that was made here. We rally up into the high of that IFVG, and also the mitigation block formed on this side of the curve. We then rally back down, and then where do we rally into? We rally into this opening price right here. Now what I want you guys to understand, all the opening prices on the left side of the curve will be utilized on the right side of the curve for redistribution. So as I've drawn out here, we drop down below this opening price. We come back up to accumulate our sell side liquidity. So now what we're doing, we're engineering sell side liquidity below this low, and we're also leaving this low and also this low behind. So now after we rally up into this SIBI that we formed on the right side of the curve, we would then displace away, then we would viciously attack this engineered sell side liquidity that we formed on the right side and left side of the curve. As you can see, right here would be our low risk sell, first stage accumulation, and then right here, second stage accumulation. I hope this gave you a much more clear view on market maker models. If you've watched some of my execution videos, then you would have saw me saying open low confirms buy program, or open high confirms sell program. And you might be really confused about what I'm saying, and how do I know just because we open low or we open high, that confirms our buy or sell program, even though we're in opposing order flow? Well, I'll tell you now. On the higher time frames, we were engineering liquidity just below or just above a higher time frame key level, such as BISI, SIBI, breaker, order block, or a time-based liquidity such as a daily high or low. And then once we open high or we open low, that manipulation of the higher time frame candle attacked that engineered liquidity, and we ran into that higher time frame point of interest. If you look to the higher time frame candle, there would have been no manipulation above or below that candle. Guess what's going to happen? That means that that buy or sell program has now been confirmed. We are going to see our SMR happening right there and then. We are going to displace away from that SMR point. We are going to do this exact schematic right here. We come up, we attack our engineered liquidity that we engineered just below this point of interest. We would then come down, and this is our low risk sell. If you get an open price that lines up right here, that right there is my bread and butter setup. You can't get any better than that. Also, I just want to cover quickly, how do you know it's the end of the higher time frame manipulation? This is exactly how you enter on the higher time frame candle's wick. If you look on these highs right here, then a highly correlated market would have not took out this high right here. We would have then formed SMT on these highs right here. Now, why is this important? As I mentioned in some of my previous lectures, SMT signifies the end of the manipulation phase of whatever cycle you're in. Let's say we have an hourly candle open high, and we know that this is manipulation taking place. How do we know that manipulation is going to end? Well, we would start to see SMT forming on the lower time frames. Once SMT forms and we get our break block, we displace below our intermediate term low, then that is a change in state of delivery. Once you retrace back up, you enter. You cannot get any better than that. That right there is the best setup that you can ever find. Obviously, there are some other things that I cannot talk about here, which I'll be talking about inside of the Time Vault, which is my paid mentorship. But just this by itself would be enough for you. Right, guys, I think I shared enough source with you today. As I've just mentioned, I've just started a paid mentorship for any students that want to join. At the moment, it is a one-time lifetime payment where you only pay once and you never need to pay again. However, this deal will not last long. Soon we're going to change back into a monthly recurring payment. So if you want to join, you better join fast, because this is the best deal you ever get. I've also got a free Discord with a great community on there, and I've linked my social down below. For anyone still watching, I've just bought a new mic. Please tell me if you like this mic more than my last one, because I'm not sure which mic quality is actually better. I hope everyone has a great rest of the day, and goodbye.